want to now talk about economic versus accounting cost. What do we mean by economic cost? An economist thinks that or believes that the cost that should be considered should not only include what an entrepreneur or a businessman spends to gather factors of production. It should also be made up of the sacrifice that he has made in order to be producing or to take active part in that business. That is to say, before you produce goods and services, you don't only spend financially to buy land, to buy raw materials, pay for transport and bills. There are other non-financial sacrifices that you make that they can be valued financially. For example, you can decide to use your house to do business. And using your house to do business means you have forgone the rent you should have collected if you gave that land or you gave out that house on rent. Also, being actively present at a business site means that you are foregoing income that you should have raised if you were elsewhere working. But for an accountant believes that costs that should be considered in a business and recorded should only be what we call out-of-pocket cost, direct cost. So that has brought about a disparity between accounting cost and economic cost. So for an economist, he believes that econs cost should be total explicit cost, abbreviated TEC, plus total implicit cost, abbreviated TIC. And what is total explicit cost? This is cost incurred when we pay for factors of production that do not belong to us, like hiring labor, like paying for land, like buying raw materials, like paying transportation and other bills. That falls under total explicit cost. While total implicit cost, as I said, is more of an opportunity cost. That is the opportunity cost that you incur before you are actively present in a particular business venture. For example, withdrawing money from your bank account and forsaking the interest that you used to get on that savings in order to put it into business. The interest on savings falls under implicit cost because that is an opportunity cost. Opening a business or a small article store or a provision store in a room in your own personal house means that what? You have forgone the rent that you could have been generating if you rather gave that house on rent. So all of that falls under implicit cost, and the economist believes that it should be part of your cost. Leaving or quitting a particular job in order to carry on a business venture, the salary that or the wage that you were earning in the previous job should constitute part of your total cost in the new job, because that is what you have sacrificed. It falls under implicit cost. So, for an accountant doesn't believe that implicit cost is important. So an accountant believes that only total explicit cost should be considered as cost or as an expense during the calculation of profit. You can see clearly that economic cost is bigger than accounting cost, because economic cost is made up of explicit and implicit, while accounting cost is made up of only explicit cost. Reason why we call accounting cost sometimes that we call explicit cost, sometimes that accounting cost, and then we call implicit cost that economic cost. So since the economist has a larger cost than the accountant, it means that it is possible for the same business to be making economic loss and accounting profit. It is possible for the same business to be making economic loss and accounting profit. Now, if two individuals come to calculate your profit margin for your business, an accountant will tell you that you need to consider only economic cost, while only explicit cost, while an economist will tell you that you should consider both economic and you should consider both explicit and implicit cost. So, economic profits, I will abbreviate profit by this. economic profit is calculated as total revenue minus total explicit cost plus total implicit cost. This is the total cost of the economist, while accounting profit is calculated as total revenue minus total explicit cost only. So just looking at this tells us that what? The profit of the economist must be less than the profit of the accountant. So let us have an example. Let us assume that Mr. Joe was formerly earning 100,000 francs as a primary school teacher. Let's say formerly earning 100,000 francs as a primary school teacher, and then he decides to resign and start up a business which he puts in 1 million francs CFA. So this is his cost of business. He puts in 1 million francs CFA, and then this money is withdrawn from his personal savings, and that bank from where he has withdrawn this money pays an annual interest of 10%. So annual interest forgone 10%. He has withdrawn this 1 million from his personal account, and that bank pays an annual interest of 10% on savings. So if he has decided to remove his 1 million, it means that he has decided to sacrifice the 10% interest that he should have been getting, which means that we are going to take 10 all over 100 of 1 million. That gives us what? That gives us this takes care of this. And then we have 100,000 francs. That means that he has forgone, he has sacrificed 100,000 francs, which is interest he should have been getting. So his annual revenue or income is equal to 1,200,000. If his annual income or revenue from the business is 1.2 million francs CFA, the question is, we should calculate his 1, accounting profit, and 2, economic profit. Let us see how that plays out. Calculate accounting profit and economic profit for Mr. Joe. So let us have the solution. So Mr. Joe was formerly earning 100,000 francs monthly. Remember that we are going to calculate everything on an annual basis. So since he was earning this salary monthly, we must convert to annually. So there are 12 months in a year, so we take that monthly salary times 12. That gives us 1,200,000. That is what Joe has forgone. Okay? After getting what he was formerly earning as a primary school teacher, we also calculate interest forgone. Interest forgone, which we got as 10% of 1 million annually, which is 100,000. So we can see clearly that things that he has forgone form implicit costs, and they are the salary he was earning and the interest he has forgone. And then his total explicit cost now, this is implicit cost, then his total explicit cost now will constitute what he has started the business with, what he has put into the business. Total explicit cost of the business is 1 million francs CFA. 1 million francs CFA. So let us start. Economic profit. Economic profit is equal to total revenue minus total explicit cost plus total implicit cost. So we have accounts profits being equal to total revenue. We said that they told us that he is generating a total revenue of 1,200,000 per year minus a total explicit cost of 1 million. That is what he has put in the business. That's what he has put in the business. 1 million plus total implicit cost. We have 1.2 million for what he has forgone as of his previous job, and we also have interest forgone of 100,000. So we have 100,000 plus 1.2 million gives us 1.3 million. So we have accounts profit being equal to 1,200,000 minus 1 million plus 1.3 million gives us 2,300,000. So accounts profit gives us minus 1,100,000 francs. So Mr. Joe, according to the economist, is making a loss of 1,100,000 francs. Let's see what the accountant will say about the same business Mr. Joe is running. Accounting profits is equal to total revenue minus total explicit cost. According to the accountant, his total revenue of 1,200,000 minus total explicit costs. The only explicit cost that he has is the amount he has injected into the business, which is 1 million francs. So, according to the accountant, accounting profits, according to the accountant, we have 1,200,000 minus 1 million, which is equal to 200,000 francs. So, you see, this answers our question that Mr. Joe is making abnormal profits of 200,000 francs according to the accountant, but when an economist analyzes his business, he concludes that he is making a loss of negative 1,100,000 francs. So it is possible for the same business to be making economic loss and accounting profit.